programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here today, the day after the Consumer Price Index release, the CPI. We got data on the Producer Price Index, the PPI. We're just filled with price indices this week. And this morning, the Producer Price Index came in at 0.2% month over month for the month of March. The core PPI came in at 0.2% as well. Headline, a touch below expectations, core in line with expectations. And coming in at that 0.2% range means that, look, if you annualize it, it's under 2.5%. And so this is very much something that you like to see on the heels of another hot Consumer Price Index report yesterday, where both headline and core printed 0.4%, and we said, golly gee willikers, that's really bad. This is not good, and we need to fix this pronto. So you get this talk today coming from the Wall Street Journal. The headline from Nick Timmerhouse, who is the Fed whisperer. He is the mouthpiece for what Jay Powell and the crew want to be able to say but can't necessarily say themselves. And the headline here is, Fed rate cuts are now a matter of if, not just when. Your thoughts, Michael?
Well, we went into this year, everyone being certain that we were going to get them, and
not everyone.
Most definitely going to happen by this summer. And you can look at it by measuring from the Chicago Mercantile Exchange's own tools on where Fed rate cuts will be coming, and it was being priced in with a high degree of certainty that they would be there, and
not a high degree of certainty.
Almost 100% certainty that they would be present by when. I don't remember exactly when the 100% certainty was priced in, but I think some rate cuts were priced in with 100% certainty by late summer, and now Mike, that's very much called into question.
If you look at the evolution of the June data, just as an example, at the beginning of this year, I'm just making sure I have all of my
ducks in a row
that I need. Yep, I've got them all here. So at the beginning of this year, you had a situation where there was a 0% chance that the Fed was not going to have cut by June. Zero.
So 0% chance that rates would still be where they are today by June. Got it.
Correct. And in fact, you only had a 1.5% chance that rates were going to be cut by 0.25%. You had a 23% chance that rates were going to be cut by 0.5%, and you had a 62% chance that we were going to have 3 rate cuts by June. And
that was not that long ago, folks.
I know you said that everyone was predicting this, but we were firmly. I'm going to take the worst victory lap I've ever had to take, because I hate this, because I'm taking it because inflation is higher and no one was expecting it. But we said this was very much a possibility and the biggest thing to be worried about in the first half of this year. We said, look, don't worry about recession in the first half of this year. The data that was indicating we may be heading into recession, that passed by mid-October of last year. That is no longer the concern. The concern that you have to have because of the economy reaccelerating was that inflation may reaccelerate as a result as well, and you really can't price these cuts in the way the market is pricing them in. And look what's going on. We nailed this thing. I'm sorry, but I want the...
We nailed the bad news.
We did, and this is why I hate this. Like, I would love to eat some crow and be like, hey, guys, guess what? Inflation was lower than expected. Like, Isn't that great? Like, I would love to be able to say that, but we got to call it like it is. And the fact is, the inflation data the last 3 months, really the last 6 months, has not cooperated now. And so you have this situation where when you look at the June picture today and where it currently stands, not where, it stood 3.5 months ago, which again, as Mike said, not that long, given that June's coming up pretty quickly. If you look at where the June meeting probabilities are today, as of right now, you have a 79% chance of no cuts, up from 0% at the beginning of the year. And you've got a 20% chance of one cut, which I still think is probably high by, 10 to 15%. I think a 5 to 10% chance of a cut being priced in is reasonable at this point, given where we are.
Just thinking about the timing, just to interrupt, sorry for a moment there, Chuck. The meeting in June is on June 12th. So you'll get a report on April's inflation because that will come out in May. But by the time the data comes out on May's inflation, they're already in the second day of their meeting at that point in time. And so that's where I go back to, and many others, this isn't my first thought on this, this isn't an original thought on this, but there's not enough time for the Federal Reserve to digest a whole bunch of new data about the economy, unless that data is the economy's gone in a completely different direction because of some weird externality and is suddenly in a recession. So unless you get that, I don't see a way for rates to get cut.
And let's be clear, there is pretty much no data right now indicating recession in the U.S. The only thing that you can point to that's kind of weak has been retail sales the last couple months. Other than that, everything's cranking. And this is why you have this rebound in inflation. It's an economy that's getting a little bit too hot again. This stuff doesn't happen in recession. You don't just have, hey, guess what? Demand fell off a cliff, and so prices went up. No. That's not how it happens. People will point to, well, in the 1970s you had stagflation. Yes, that was caused by shocks that were not related to the state of the U.S. economy. That was caused by, Nixon going off the gold standard, then the oil shocks. You can go down the list. It was not because you didn't have stagflation because the U.S. economy slowed down and companies said, hey, the best way to deal with the slowdown is to raise prices. Well, no, that's not typically how it works. So when we look at where we are right now, I'm going to look out to December because we got to do it. It's 9 months away now.
Yep.
December, 11.2% chance that the Fed funds rate is still going to be where it is right now, and 88.8% chance that there is going to be one or more cuts by the December meeting, and a 0% chance of any hikes by December. Here is why I find this problematic. I can buy the case that the economic data can meaningfully shift negatively over the next 6 to 9 months, and maybe there's cause for cuts by the end of the year. Totally buy it. I can buy that, left, right, got it. What I don't buy, and what isn't being priced in right now, is that there's a 0% chance that the Fed needs to hike interest rates before the end of the year. That's right, hike. Not cut, but hike. And here's why I say this. Fed funds rate has been sitting at 5.25% to 5.5% for, let's see, when did we get up this high? Hold on, I just got to pull this up from last year. We've been sitting at this point since last July, I'm sorry. So you do the math out, it's been 9 months that the Fed funds rate has been sitting here, Mike. Typically, we start to see the slowing impact of the more meaningful hike in Fed funds rate after about 1 to 2 years. And most of the hiking was done, we were north of 4.25% by January of last year. So it's been 15 months now.
Yep.
We're not seeing any signs of this biting right now. Jobless claims came in this week. 211,000, below expectations of 215,000, and below last week of 222. Continuing jobless claims still floating around 1.8 million, some of the lowest numbers we've seen in 50 years. There are no signs of meaningful economic weakness here. And what I take from this is not just that, hey, the Fed might need to maintain rates, but is the Fed asking the question, hey, what if rates aren't restrictive enough? What if we got to go the other direction? And no one's really asking this one still yet.
So, Chuck, the last 3 months in a row, you've had core prices on CPI. And I know we talk about PPI, but CPI, the Consumer Price Index, core prices, each of those last 3 months have increased by 0.4%.
Which is bad.
People look at core prices as more of an indicator of underlying inflation. It speaks more to the services economy, which is more difficult to beat out or to end than just a transitory level of inflation from, say, an oil shock or a food price shock. If it's 3 months in a row, like that annualized rate, think about that as 4.8% levels of inflation. I'm not saying it's very likely we will end the year there, but that has been the pace for the last 3 months.
Mike, look at the last 6 months. It's running 3.9.
How high does inflation need to get? I don't mean in your mind. I mean in this Federal Reserve's mind, do you think, for them to have to consider hiking rates by year end?
6%.
Yeah. Yeah, if it spikes above, I would say even above 5%, they're probably talking about higher rates because...
I don't think so.
No?
No.
This Federal Reserve is just too inclined to cut rates.
Here's why I think this. The Fed has this idea... Let's take a quick break and then I'll explain it because otherwise I'll be here for the next 15 minutes and then we'll be like, oh, gee, we were supposed to go to break and we didn't. So quick break and then I'll explain not why it's my view that the Fed shouldn't raise rates until inflation gets to 6, but here's why I think the Fed is inclined to not really touch things until inflation gets even hotter than it is right now. We'll talk about that when we come back.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
All right. In our last segment, I said that it was my belief that the Fed doesn't really seriously start talking about raising interest rates, hiking interest rates, unless inflation gets back in that 6% range. Currently, where we stand, headline inflation is running 3.48, core is running 3.8 on CPI. PCE, which uses a different set of inputs, is running 2.45 on headline and 2.78 on core. So that's where we stand right now.
Those are year-over-year figures, Chuck?
Those are year-over-year figures,
Wonderful.
Yes. The reason why I don't think the Fed starts talking about hikes until inflation gets to 6% is twofold. The first is they have this idea of what's called the neutral rate, which is the rate at which the Fed funds rate is neither adding nor subtracting from economic activity. It's just sitting there neutral. It's not doing anything. And in general, when you look at the literature on this from the Fed over the last couple of years, they believe that the neutral rate is somewhere around 0.5%, maybe 0.75% at the high end. So if inflation gets to 5 and they still have the Fed funds rate at 5.25 to 5.5, they could plausibly say, hey, this is just 1 month at 5, and we're still close to normally restrictive territory. We don't necessarily need to do anything here in order to stamp this out. It might just be a short-term fluctuation and it goes back down. So that's part one of how I look at it. Now the problem is that there is no evidence that the neutral rate is 0.5. I mean, it's an estimate, but you never know where it is at any given point in time. It's a theory more than something that you can use practically on any given day. So I don't know that that's necessarily the best way to do it, but the Fed may still choose to go that route. It just could be something that they end up picking. The second piece is that, for better or for worse, if the Fed can't make a move in June or before, if they can't start either going up or down in the next 3 months, and by the way, inflation is not going to be running at 6% annually by June. It's just like if you do the math, you'd have to basically have 1% monthly inflation prints the next 3 months.
Yeah,
and even though it's been warm, it's not that warm. It's like even back in 2022 as an example, when you look at the month-over-month numbers, we only had 2 inflation prints in 2022 that came in at 1% or hotter.
Right.
And that was with oil prices, going up 40% in the span of weeks. So you're not going to get that. But the reason why I would say, look, they need to start by June at the latest, is the last thing that the Fed wants to appear to do heading into an election is to have its thumb on the scale in either direction. And so you're not going to get something where they come in and say, gee, you know what? The inflation data has been better than expected for, the summer. We're going to cut rates in September. Because that gives the opinion, hey, you're trying to help the current administration right before the election. Like, it's bad optically. I'm not saying it's actually bad policy. I'm just saying it's bad optically. Likewise, if inflation is heating up over the summer, you don't come in and say, hey, you know what? We're going to hike interest rates right before the election. Because once again, it looks like you have your thumb on the scale, this time not for the current administration, but for its challenger. And so they simply are not going to make the first move right before the election, unless their hand is really pressed. And again, that's why I say it's got to get to 6% for them to consider it. And there's not really a path to it getting there in the near term. So I think both of those factors, wanting to maintain the appearance of being apolitical and the fact that they have this belief in this neutral rate that they still think they're on the right side of, I think that's preventing them from considering the possibility of, hey, maybe we should hike. And by the way, I've said this again and again, after those first 2 hot months of inflation data, if Powell actually wanted to put this to bed and be able to make a convincing case that, hey, we're doing what's needed and we'll handle this as it comes up, they should have freaking hiked in March. And I said it before at that meeting. I said it after the February inflation data. You got to hike in March. They didn't, obviously.
I have a counter proposal, Chuck. I don't think they even needed to hike in March. I think they could have just simply stated, wow, inflation has been hotter than we expected, and we, based on this data, will not be able to cut rates. Rather than coming out and saying, we don't know what this might mean. We still think we'll be able to cut by 0.75%. I don't think they even needed to cut rates. They just needed to not speak so dovishly about where inflation is going and rates are going based on the January and February reports, because now it's set it up for this period where you say, oh, turns out January and February weren't some exception. They weren't some seasonality problems. This is inflation that is looking more ingrained and tougher to go away. I think that's all they have to do.
This is also why I now, I've really come around to this in the last couple of years, that the Fed is just over-communicating because they box themselves in.
Yeah.
The Fed never used to do any of this stuff. You never had Fed speakers just talking, during the week about their thoughts and, well, how many rate cuts are appropriate and this and that. They didn't do the summary of economic projections. They never told you, hey, here's how many cuts we think are going to be coming next year. It was an open question. You never had any of this data. And the problem is that it pins them in and prevents them from doing what they need to do in order to strategically manage things. Because if they come out and say, oh, look, in the last 3 months, now we have to pivot and we got to start, talking about no cuts this year, then they lose their credibility. And so it's like, don't publish this stuff if you want.
If you want the flexibility, then you can't put this stuff out there.
Correct. Allow the market to follow your actions and not your words.
Now, I think there are problems with the way they operated in the 70s and 80s, too, because then you had, one, you didn't know where Fed funds rates were. You didn't know any of the thinking of the Federal Reserve chairs unless you happened to personally know them. And then that probably set up all sorts of problems when it comes to insider trading and other issues that you have when, public entities don't communicate.
Just do what Greenspan did in the 90s.
Yeah, that would be my point, is this is where we are, and then shut your mouth. Just
yes.
As Will Ferrell said in Step Brothers, shut up.
Shut your mouth.
It's gone too far, and it's preventing them from executing policy the way they need to, in my opinion. And that's bad. It's not good. Okay, that's enough inflation talk for today, right? We can move on?
I would agree.
Okay, let's take a quick break. And when we come back, let's do a little bit of, this looks fun. Yeah, we'll do a little bit of job market fear-mongering right after this and Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now's the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following yesterday's sell-off driven by a hotter-than-expected consumer price index, markets today are in mixed territory as traders are also reacting to the producer price index released this morning, which revealed wholesale prices climbed 0.2% last month, less than forecasts of a 0.3% increase. Right now, the Dow is down by nearly 0.2%. The S&P 500 is down by about 0.25%, and the Nasdaq is up by 23 points. Russell 2000 is off by nearly 0.25%. 10-year Treasury up by 2 basis points, now at 4.58%. And crude oil is down by 0.75%, trading at $85.55 a barrel. Big deal in the biotech sector this morning. Vertex Pharmaceuticals agreed to buy Alpine Immune Sciences for $4.9 billion to bolster its kidney disease portfolio. Alpine stock surging by 36%, while Vertex shares are up by 1%. Meanwhile, shares in Constellation Brands are up by 2% after the maker of Modelo and Corona posted stronger than expected quarterly sales this morning as strength in its beer brands helped offset challenges in its wine division. Elsewhere, CarMax reported an earnings and revenue miss for its fourth quarter, sending shares in the used car retailer down by nearly 13%. Nike was upgraded by Bank of America to buy from neutral, where the bank said Nike's estimates now look achievable and sees mid-single-digit revenue growth with margin expansion for the sneaker company. That stock up by 2%. In the first quarter, corporate earnings season will officially kick off tomorrow morning, where the likes of major banks, including J.P. Morgan Chase, Citigroup, and Wells Fargo, will report ahead of the opening bell. I'm Tucker Silva, and that's Wall Street Watch.
Mike, we've talked for the first half hour of the show today about inflation and why it's too damn high. We now turn our sights to good old-fashioned fear-mongering based on no evidence.
I was the one that picked this story, so I'm particularly proud of it because that was my exact takeaway as well. I sent this one to Tucker this morning because it just doesn't seem to have any foundation whatsoever. But go on.
The headline from Business Insider: the job market looks rock solid, but these are 4 signs it's weakening as labor trends mirror past recessions. So here are the 4 signs. The first one is unemployment trends are mirroring past recessions. Wow, you couldn't be more original than what you wrote in the headline. Here's what it says, is that even though we are near historic lows, you've had a little bit of a rise in the unemployment rate over the last 12 months.
True. Most recent unemployment rate, 3.8. Is that correct?
Yes.
Low was 3.4. Over the last 12 months.
Keep in mind, it's the 3-month moving average, which was 3.5.
I'm with you. But you know, if you're just looking at the high and low, we got as high as actually 3.9. The low is 3.4.
It then quotes David Rosenberg, who we've talked about on the show. One of the important things in reading financial media is knowing who you're reading, because they all have different personas and different styles. David Rosenberg has been calling for recession for the last 15 years, and the only one that he got was during the pandemic, where we basically shut down most of the economy. During the 2010s, he was calling for recession every single year, saying that it was right around the corner because of this data or that data. Any time that David Rosenberg is cited as a source for a possible recession, you have to discount it by 100%. Not because he's always wrong. Eventually he'll be right. If you call recession long enough, you're going to be right. But David Rosenberg is the boy who cried wolf when it comes to recession, and you can't trust him because you don't know if there's actually any signal there or if it's just his noise, because he's always calling for recession.
So then let's talk about something that has been a reliable recession indicator, which is called the Somm rule, named after economist Gloria Somm, who came up with Claudia, sorry, close. She said, look, take a look at the 3-month average of unemployment and compare that to the 3-month low in unemployment over the last 12 months. And if you see a 0.5% rise in those two numbers, then that's a very good and reliable recession indicator. Far better than the inverted yield curve. Doesn't tell you about whether one's coming. It just tells you that you're probably in one when those things happen. And we're at 0.3%. You need to get to 0.5% to trigger it. Have you ever, Chuck, read any paper or any statistical analysis whatsoever that indicates that when you're at 0.3%, you're heading towards a recession? Because I certainly have not seen that as any sort of leading indicator.
No, and in fact, we got to this exact point in October of last year,
worse.
And then the numbers were reversed.
It was worse last year.
So
it didn't get there.
A signal has to actually happen for it to be a signal. You can't have a pre-signal signal. That's just dumb.
Agreed.
Otherwise, you would set the signal such that it's 0.3%, not 0.5. Number 2, layoff announcements are rising. According to the career transitioning firm Challenger, Gray, and Christmas, job cut announcements are now 120% higher than they were in Q4.
However,
the layoff rate remains exactly where it was in Q4. So just because companies are announcing more layoffs doesn't mean that more are actually happening.
like, pay attention to what I do, not what I say. If you want to learn about the economy, stop listening to what people are saying they're going to do and look at what is actually happening, which is incredibly robust hiring, incredibly
The
low
other
firing.
piece that I think is really quite dumb, and I'm pulling up the data just to make sure that I quote this correctly, because it's this is a big one here. So the third item is that it says, fewer people are being hired full-time, and that the average work week is now around 34 hours. Mike, I pulled the data set for all of the data that we have the average work week.
Mm-hmm.
It has been 34.4 to 34.5 for pretty much every reading in that data set for the last 20 years. As of right now, it's 34.4.
So
We've never averaged a 40-hour work week, so this is just factually inaccurate in addition to just being misleading. It's just not there.
Yeah, because they don't just say that it's 34 hours. They point out that the 34-hour average work week is a sign part-time work is making up a larger share of the labor market. No, it's not. It's been this way for 20 years.
Correct.
No, it's not.
Correct. And finally, number 4, businesses are less keen to hire. Once again, according to Challenger, Gray, and Christmas, employers announced plan to hire just 36,000 workers in the first quarter. Well, not everyone goes through them, so that's just not how it works. Because we actually see the hiring data, and even when you look at, again, broad groups of different data, whether you're looking at either of the government reports, the household or the establishment survey, both of them showed at least 300,000 jobs added. ADP, who actually processes payrolls, said, oh, yeah, you added, 184,000 jobs in the month of March?
I don't recall, but yeah, it was certainly positive by over 100,000.
And then they quote some person by the name of Gary Schilling, a legendary market commentator who called the dot-com bubble. Who cares? Mike, have you heard of Gary Schilling?
I haven't. I don't mean to minimize him. Maybe he is a legendary
But don't
market
call him
commentator.
if there are people who are actually legendary. And here's the thing: when you use the word legendary, this is about trying to read this as a news piece and not just as the opinionated garbage that it is. When you use the word legendary, first of all, that person actually has to be a legend. When I think of market legends and investing legends, I think of Warren Buffett. I think of
Munger.
Again, Charlie Munger. I don't want to give just all the Berkshire guys. I think of Peter Lynch. I think of Bill Gross, even though he's not, what he used to be. I think of
Muhammad El-Arian. There are others that come to mind.
Exactly.
Before
I think of Stanley Druckenmiller. These are the people that I think of as legendary. If you have to use the word legendary, you're probably not. All right, and if the last thing that you called right was the dot-com bubble, then what happened for the last 24 years? So this is a bad piece, and you need to be critical when you're reading pieces like this, because understanding that the biggest risk to the U.S. economy is not recession right now, but more inflation. I'm not trying to say that the economy is perfect. I'm not. I'm trying to say that you very rarely end up in recession when employers are adding 200,000 to 300,000 jobs a month. Housing is seeing 10%, annual growth in sales, and nothing else is flashing recessionary indicators. You're just not there right now. There may be a time 6 months from now where you can sound that alarm again. But out of the 4 things cited in here, literally none of them were accurate.
Yeah, if unemployment continues to climb, right? You get up over 4.25% unemployment, you'll be hearing this stuff from us. We will say, point this stuff out.
We pointed it out in the fall.
We get weekly numbers on the labor market. We get monthly numbers on much more details of the labor market. We get private payrolls. We get public data. And don't go crying recession until there's some actual fact-based evidence of it being there.
Because look, we in the fall we talked about it in September and October. We said, look, if next few months of data are bad, there's probably a recession coming later this year. If not, early in 2024. If not, then you can put that recession watch on hold. And the data showed improvement, and we said, yeah, it's you're not getting recessionary data right now. So we'll talk about this stuff. We're not trying to say it never happens, but this is an article that's rooting for recession, and first of all, that's just bad. It's bad to root for bad things to happen. But beyond that, this article is just not accurate, and you need to be a discriminating reader in terms of the quality of information that you're consuming and how you read pieces, because this is a bad piece. Let's take a quick break here. When we come back, oh, good. This will be
now the next article isn't we're in a recession.
Yes.
It's we're never going to have one again.
Yes. Next, we'll discuss why that idea is also dumb.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now's the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence at Castle Island. Registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information and to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
So last segment we talked about why it was bad to write that recession is, imminent based on what we're seeing in the labor market when it's not. Now we're going to talk about this piece from the New York Times. Is the boom and bust business cycle dead? And the answer, ladies and gentlemen, is no, it's not. And I know it's not because we saw an awful lot of these pieces in the late 1990s as well. And, I remember, seeing these things like, have we cracked the code to, never have recessions again? And the answer is no, we haven't. This is a business cycle that is unique. It's unique because of the circumstances from which it developed, exiting the pandemic in 2020. It is unique because of the circumstances of the technologies that are being developed during it, such as artificial intelligence and things along those lines. But every business cycle ends at some point. It's just a matter of what is the cause, and the cause of the business cycle end is likely going to be a new and different one from previous ends of business cycles, just as we've seen from all of the other ones. What it usually ends up being is a combination of one of two things. Usually it's one thing that ends up being impacted, but it's too much leverage, and sometimes too much inflation that leads to higher interest rates that then results in that leverage blowing up.
Yeah, I'm right there with you. I think here's where I could get on board with thinking, but there's no statistical analysis here to back it up, so I don't want to go with pure theory. But you might be able to convince me, if you started actually looking at the data here, that due to government policies these days, due to Federal Reserve and Congress's seeming willingness to intervene in business cycles, that they might be less severe today in terms of some of the impacts that you would usually see. You could speak to the unemployment rate. You could speak to the quantity, percentage of bankruptcies or things along those lines. I haven't seen any data published to back that assertion up. But hypothetically, I could buy it. The number of tools that the Federal Reserve is using these days compared to 40 years ago to try and prevent big cataclysmic crashes and chain reactions in the banking system today, for instance, are pretty significantly different than they were 40, 50 years ago. But just telling me that because our economy today is more focused on technology and services compared to agriculture and industry, I don't see how that draws any line between why we wouldn't have the end to a business cycle anymore.
Correct.
I don't get it.
So I think talking about this, it's if you want to say, hey, this particular cycle, may have more room to run and maybe more extended because of factors X, Y, and Z, I think that's a reasonable case. I can buy that. But, hey, is the boom and bust cycle dead? No, it's just there's going to be different stuff that causes the boom and bust cycle, just as there always is, because the boom and bust never happens in the same place twice. The tech bubble didn't reform 8 years later into a new tech bubble.
No.
Instead, we had a housing bubble.
Mm-hmm.
You go back before that, the previous recessions that we had, early 1990s, saving and loan crisis was a banking crisis. You go back to the 1970s, the recessions were caused by, high inflation and raising interest rates because of oil price shocks and things like that.
Yeah, next one we'll have something crazy and weird like, I don't know, tulips or something.
I think we're past that, but, it's... Look, there's going to be something that no one expects except for a small group of people that, end up calling it right.
Yep.
And that's going to be, what happens here. So I don't know where it's going to be. It's probably not going to be in housing because the housing data and borrowing data there looks really good. It's probably not going to be in, it could be in a different kind of tech. I mean, again, the S&L crisis and the financial crisis were two manifestations of the same thing that just happened differently to different banks at different points in time. So I guess, look, maybe it's something related to tech, maybe it's related to government debt levels. It could be anything.
I'll also say that could be the reason why nobody is reliably great at recalling recessions over and over, because they're always caused by different things. So if you were great and tied into the housing market in 07 and 08, you might have accurately called that bubble. You might not have seen the tech bubble because you're not tied into that space. And so I think, again, relying on somebody to time it out and properly call the top is also horribly unreliable. We've got to take a quick break. When we come back, Dan Stack from the DAV joining us in the studio. We'll be right back at it next on the Financial Exchange.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what are some of the things that can derail a retirement that otherwise would be going fine?
I mean, there's all sorts of items. Certainly, a pension going bust or Social Security getting reduced, people worry about. Certainly, we all worry about market volatility and the risks there, or inflation. But one of the ones that I think people almost intentionally avoid is the risk of increased healthcare costs. I think we're familiar with Medicare costs and things along those lines. But the portion of Americans who will face some sort of heavy end-of-life care and the costs associated with it, it's a big chunk of Americans, and gosh, it's such a taboo issue that we hate talking about and being transparent about. And so you really have to tackle that one and be straightforward with the potential risk.
It seems to me that just doing some stress testing with some actual numbers can make a big difference in determining whether or not that can cause a problem for you.
Yeah, most certainly. But the costs of things like nursing homes or assisted living facilities are so frightening to people and almost unfathomable in terms of total cost that we just choose to stick our head in the sand sometimes. And that's not necessarily the wrong approach to things like market volatility. But when it comes to planning out your future financial success, putting your head in the sand is a losing strategy.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Welcome back to the Financial Exchange, the day after we continue to digest hotter-than-expected consumer price index data and the market's reaction to it. But before we get back to that, Dan Stack, the CEO of the Disabled American Veterans Department of Massachusetts, joins us here in the studio today to talk a little bit about the registration opening for the DAV 5K coming up later this fall. But before we get there, talk to us a little bit more about the diverse number of programs that are available through the Disabled American Veterans Department. And Dan, thanks as always for joining us.
Well, thank you very much, Mike, for having us. As you're one of our best partners, and we really appreciate your support, that's for sure. Well, we have DAV has a giant transportation program throughout the state, taking veterans to and from their VA medical centers. We also have a local veterans assistant program in which we have veterans that volunteer, DAV members that volunteer to assist other disabled veterans in their community. It could be raking leaves, helping them get groceries, or actually just sitting with them and spending time to help them get over the loneliness that they might be enduring. We also have our housing program, which is one of our biggest efforts right now.
That's the one I wanted to dive into a little bit, Dan. I mean, we're covering story after story about how housing costs in the United States, and certainly regionally here in New England too, are about the highest they've ever been when you factor in prices plus mortgages. Talk to me about your housing program. Specifically, I know you have some available in Central Mass and how they work with veterans.
We actually have basically 3 locations, which 112 rooms that we actually have, the veterans that we can handle. Probably our premier housing program happens to be the one at 3 Victory Lane in Gardner. That is a 22-bedroom condominium complex in which we are able to bring veterans that have been either homeless, on the verge of homeless, or very low income, as you're mentioning, and can't afford to actually find a place that they can live in. This particular facility, we deal with these veterans that are in need, many of them, further education. So they could go to Mount Wachusett College if they wanted to. We have different programs that deal with vocational rehabilitation, also putting them into trade school if they needed to, in order to get them the academia that they need to get back out into the workforce. We're very proud of that particular unit because everyone who has come in there, 100% of them who leave that particular facility end up with some form of permanent housing.
Wow.
And last year...
100% of them leave with... Yeah, that's fantastic.
And that is the key to veterans housing, unfortunately, happens to be that your statistics can be kind of skewed a little bit because a lot of individuals leave one kind of facility and then they end up being reprogrammed into another facility, so they only get 2 years here, 2 years there. We got away from that. We said, no, we don't want any part of that particular program. If somebody is with us 5 years, to get them completely rehabilitated so they can get out into their own home, that's what we do.
You have 3 campuses that I'm aware of. There's the Victory Campus in Gardner, Massachusetts, the Hero House in Leominster, Massachusetts, and the Armistice House in Leominster. What are the eligibility requirements if someone's in need of housing with a military background? What type of people and who's allowed into these types of facilities, and how do you qualify and how do you apply?
Basically, you can go right online to davma.org and go to our housing and click on that, and there's an application that they can fill out for it. Most everybody that is eligible is either of low, I would have to say low income, or disabled veterans. And here's the kicker. We have a lot of veterans that are 100% disabled that can't afford a home in this in the Commonwealth of Massachusetts. Sure. I mean, yes, they may be getting close to $3,000 to $4,000 a month, depending on their degree of severity, but that alone would not sustain them in housing. So we have facilities that we would be able to help them get permanent housing doing with us.
I know that frequently navigating all sorts of stuff with the military after you're out can be incredibly complex, whether it's applying for disability benefits or all sorts of different programs that are available to veterans that might be tricky to apply. What sort of support, in addition to the housing, comes alongside that within the DAV?
Well, for example, one of the biggest things about housing is how do they get there? And many of them get there because they do not understand what benefits they might have coming from the VA.
Right.
So we have Department Service Officers and National Service Officers that navigate the veteran through the VA process in order to make sure that they get the proper health care they're supposed to be getting from the VA and the appropriate compensation for the disabilities that they basically incurred while they were on active duty. So our service program, our housing program isn't where you just stick somebody into a house. Yeah. You can do that. But if you do not address the reason why they ended up in that particular situation to begin with, and that happens to be, it could be mental health. We basically make sure that all of those that are with us, if they are receiving mental health, that they get to their appointments. We make sure they're transported. If they're living in our congregate care facility, we make sure that they're taking their medication appropriately. If in fact, it's one of those situations where they just never file for VA compensation, we make sure that they file, get to their appointments, see the doctors, and keep up with that so they maintain that VA compensation.
Dan, we're going to get to in a minute the one of the biggest fundraising, or maybe the biggest fundraising event that you do every year, which is the DAV 5K later this fall. Before we get there, I know there are plenty of opportunities for people to donate to the cause, to sign up for the race and raise money for the DAV. For those interested in physically helping out the DAV, for volunteer opportunities, what sort of stuff what sort of opportunities are there? What sort of programs do you offer for those that are either military, non-military, to volunteer and get involved with the DAV?
I'm glad you asked that particular question, Mike, because you do not have to be a veteran or a disabled veteran in order to volunteer with the Disabled American Veterans. And we have many, many different types of programs that we need volunteers for. As I mentioned earlier, the biggest one happens to be our transportation program. In that regard, we always are looking for those that may have a day or even a few hours a day where they'd be able to help utilizing one of our vehicles, drive a veteran to and from his home to the VA and back again. The other we have is what we call our local veteran assistance program. In that program, again, a veteran can go on to davma.org, look up volunteer opportunities, and see what's available in regards to helping out another veteran. And that could be easily, literally helping them go to the grocery store, buy their groceries. It could be just sitting with them and talking to them on a couple of daily basis to help with the loneliness of a veteran that's living alone. It could be actually making sure that the yard is kind of picked up. Or we have one guy that just takes the trash out for the individual once a week. He does that. And again, that alleviates something that the veterans. We also have programs for the DAV volunteers in the VA medical centers. We have a lot of volunteers that go to the VA, and what they do is they not only help transport veterans, but they may sit with them by the bedside. They read to them. They help them with their wheelchairs, getting from whatever bedside they have to the appointment that they have within the VA, whether it be for mental health counseling, checkups, any of those things that they may need for their physical well-being.
So last but certainly not least, I know that registration for the DAV 5K opened today.
Yes, it did.
Opens today. This event occurs every year. It's become a pretty big internal competition here within our own office to try and beat your coworkers in the DAV 5K. But talk to us about the race. Talk to us about the sign-up process and what people can expect later this fall if they want to attend.
Well, first of all, we're hoping everybody that listens to this program, especially my cousin who always listens to it, Bob Shaughnessy, I hope he'll sign up this particular year for it. All you need to do is go to DAV 5K Boston and just register right there. Even if you want to register, we would hope that you would also look at building a team. That is the biggest game. That's the Financial Exchange has a team.
Yep.
And with that team, you're very, very kind. More donations come in, and then that's what we would really appreciate. So you can build a team, singly register. You can actually go there, and if even if you're not a runner or a walker, but you just wanted to make a donation, you can make a donation.
It's an incredible event. There's food vendors. There's all sorts of the honor guard. What was the cannon start is pretty awesome.
Having that 105 go right off next to everybody, I think that all those who have never been in the military understand why most of us can't hear crap afterwards. So it's true.
Dan Stack, he's the CEO of the Disabled American Veterans Department of Massachusetts, joins us today to talk about the kickoff of registration for the DAV 5K and the truly amazing programs they have to offer disabled American veterans in the New England area. Dan, thanks as always for joining us. Really appreciate it.
As always, we're very appreciative of the Financial Exchange and your group.
Quick break. Trivia coming up next. We'll be right back on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift, because you actually have to take the money out and then the gift is complete. But when you set it up, the asset would avoid probate But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Well, trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. Well, yesterday it was announced that Margot Robbie will be teaming up with Lionsgate to produce a Monopoly movie. The Monopoly board game was created in 1903, but it wasn't called Monopoly until 1935 when Parker Brothers bought the rights to the game. Trivia question today: what was the original name of Monopoly? Once again, what was the original name of Monopoly? Be the fifth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385, and the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about housing and the cost of housing. I know a lot of times we discuss, hey, this house, sold for X number of dollars, and here's how much your mortgage would be if you put 20% down. But as anyone who's owned a home will tell you, there's an awful lot more to the cost of owning a home than just the principal and interest payments that you make.
No doubt.
You've got your property taxes. You've got your maintenance. You've got your insurance. You got all the other random stuff that ends up coming up. And in a couple of these cases, particularly property taxes and insurance, you're seeing some big jumps in recent years that are now causing some people to have to rethink where they live, unfortunately.
Yeah, especially in some of the more recently natural disaster-prone areas of the country. So I'm thinking western parts of the country facing wildfire, coastal areas facing flooding problems. You have seen property insurance rates just skyrocket. In some parts of the country up 30, 40+% in a year or two. Around here, I've seen it as well. It's been a little bit more modest, but substantial increases across the country in the insurance rates that we're seeing in particular. Property taxes up as well, but maintenance costs, right? I mean, you think about inflation, you think about the cost of replacing everything and finding labor these days. Quite honestly, if you're not factoring in that 1 to 2% of the value of your home every year will need to be sunken back into that home just to maintain it, then you're probably underestimating what it's going to cost. I think the average cost to maintain a home in the nation right now was running $6,600 a year last year. That is not what I think a lot of people were anticipating when buying their home initially.
And the question, the insurance piece is a big one, especially you talk to people who live in either Florida or California. You mentioned, states affected by natural disasters. These are the two biggest ones, along with Louisiana, that are seeing the biggest increases in insurance cost. And look, I probably have like an unpopular opinion on this, but I very much believe, and I'll really restrict this just to water. If your house is destroyed by flooding water, that's a sign there shouldn't be a house there again. And I say this, like, I know that's hard if like you're someone who lives in one of those areas, but here's the thing about water. It frequently comes back to areas it has been before. It's not like a forest fire where if it comes through once, well, it's burnt down the whole forest. It can't really do that again. There's not enough fuel for it to be able to burn over that area. So you don't have the same type of risk there, but with floodwaters, you absolutely do. It's the question that we've dealt with historically is like, okay, can you build levees and dams and this and that, and in some cases, like, you can manage it, but those cases where you can't are generally not the ocean. So I guess I'll even restrict this to, if your home is destroyed by the ocean, honestly, I don't think that house should be permitted again. And I know that that's hard for someone who's like made their life there, but the problem is that with how home insurance works, everyone else is basically subsidizing that house's insurance.
I suspect that that's more the direction that we will go. And I've said this before, but the state of Florida is the easiest example when it comes to the flooding risk that we're talking about. California has the same issue, but with wildfires. But to your point, it's a different type of risk. And what's occurring now in Florida is that the state of Florida has its own last resort insurance marketplace that is making up a growing and growing percentage of the total insureds in the state. And the state's one hurricane away from requiring, in all likelihood, a federal government bailout or just not covering the losses.
To put this in perspective, in January of 2020, the state-backed insurance known as Citizens Property Insurance Corporation, so it's backed by the state, had 443,000 policies in force. By the same time, a year later, it was up to 554,000. By a year later, it was up to 776,000. In 2023, it was up to 1.16 million. And by the end of last year, it was up to 1.2 million. So the number of policies covered basically by the state of Florida tripled in a 4-year period, which is bad. Citizens currently holds, and this is according to a report from Newsweek, it covers 18% of Florida's insurance market.
Mm-hmm.
And it's something where the solution on this is one of a few things happens if you end up with a catastrophic hurricane in Miami, just as an example, which you haven't had one recently, but recently. One of a few things happens. The first is, okay, let's do a giant tax increase on all Florida residents because we need to replenish this over, the next however many years. And it results in a massive property tax increase to basically cover that cost.
Mm-hmm.
Option 2, hey, we're going to, and this is where I think you probably end up, it's probably a combination of these. Option 2, federal government going to have to end up backstopping that, and that means that either taxes or borrowing for the federal government go up, which means all of us end up subsidizing Florida
properties. Yep.
Okay, which was just what I'd love to do that. Like that makes my day. I can't wait to do that. It sounds wonderful. Option 3 is pretty much, hey, we're not going to honor these claims, and that house isn't getting rebuilt, which I don't think will happen. But honestly, I think that if your house is basically deemed to be uninsurable by private insurers, I'm not really sure there should be a state-backed solution there.
No, because the state-backed solution will have to be bailed out by all the rest of us.
Like, I really don't think that should be an option.
It is amazing that, two polar opposites politically, California and Florida, are coming to the same stupid solution.
Yes, they're both in an equally bad position. Quick break here. The answer to trivia is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt. Call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, what was the original name of Monopoly? Well, that would be the Landlord's Game. The Monopoly board game traces back to 1903 when Lizzie Maggie created the Landlord's Game. In 1932, Charles Darrow was introduced to the game and changed the name to Monopoly before he and Lizzie sold the game to Parker Brothers. Winner today of the Financial Exchange Show t-shirt was Mac from Meredith, New Hampshire, and Mac's also registered to win a $100 gift card to Applebee's, which we'll give away on tomorrow's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
I would say that Monopoly in the Armstrong household caused the second most amount of fistfights and tears. Do you guys want to take a stab at the worst board game in the Armstrong household for fights and tears?
Oh,
Risk.
Risk.
Yeah.
It was always Risk. Yeah. Oh, man.
Yep.
Just breaking alliances, ganging up on the youngest sibling. Oh, yeah. Risk.
And here's the thing with Risk is Monopoly, at least, okay, the game's over in an hour. Risk, you'll be there for 4 hours, and then it's like, I put all my time into this, and then you did that?
Yeah. Yeah, Risk.
Risk
was it.
Do you think that Monopoly should go through a rebranding?
No.
No, I like the classic. I like knowing exactly what I owe in rent because I've played it so many times. No, I would keep it exactly the way it is.
I'm just the Monopoly name. It doesn't really play well these days. Everyone's very antitrust.
Yeah, I see. No, I like it.
I think. No. Okay, we'll stick with Monopoly. Let's talk about this piece from Barron's. You still have time to make an IRA contribution before tax day. Is that correct, Michael?
I mean, just barely. About 4 days.
Yeah, you're running out of
really
time.
closing in. You do actually have more than that. If you're filing an extension, you can possibly make an IRA contribution later than that. But, I mean, I'm sure you get this question. I get this question all the time. Like, it's not only can I, which, yes, you still can. Closing in here, there's all sorts of rules depending on who you're working with, what custodian. Oftentimes the envelope needs to be dated if you're making a physical check country. Like all sorts of things that are required here if you're going to do it. But suffice to know, you're closing in on the deadline, which is the tax filing deadline. But then I think the more important question is, can I from the other rules that are out there? Because the deadline isn't the only one. There are all sorts of rules when it comes to IRA contributions based on how much income you make. Regular versus Roths have different rules when it comes to that. There are different rules depending on whether or not you have a 401k, which unlike 20 years ago, most workers these days have access to a 401k, and that changes the eligibility rules. There's also health savings accounts. Who can utilize those? When can I contribute to them? There's different contribution limits and vastly different benefits to these as well. But I would say, Chuck, one of the more common questions that I get from people, whether it's clients or non-clients, is, should I be contributing to a retirement account? It's obvious if you're getting a match, right? If you're getting an employer match, I think most people recognize, hey, that's free money I shouldn't pass up. But should I be contributing to a retirement account? And if so, a traditional one or a Roth? And then subsequently, once I'm retired, where should I take the money from if I have both? Or maybe I just have savings accounts or an inheritance too. Where do I organize things today while I'm in my career? Maybe I'm worried about tax increases. Maybe I'm not. Maybe I'm going to change locations later in life in terms of where I live. How should I be saving for my retirement now? And then once I'm retired, what buckets do I utilize in what order to be most efficient? Is any of this going to fundamentally change whether or not you can retire? I'd honestly say probably not. If you're saving money in one way or another and getting that compounding interest, to me, that's the most important piece. But if you can also do so while forking over less money to the federal government, then I think most people like that too. If you have questions about your own personal situation, whether or not you should be contributing to a retirement account, an IRA, a Roth, a 401k, how it's going to impact your overall retirement success, Give the folks at Armstrong Advisory Group a call. We can help you assess the situation and build a plan that fits your specific scenario, not your neighbor Steve, not your cousin Vinny, your specific financial scenario by calling 800-393-4001. Again, that phone number for the Armstrong Advisory Group is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tucker forwarded over an email that he got from a listener when we were talking about the property insurance stuff. I want to talk about it briefly.
Okay.
The first line. Love your show. Always. I mean, it's great.
Appreciate it.
Thank you. I'm a snowbird who's in Florida. They had an odd way of dealing with claims. Our condo building was damaged by Ian. We settled the claim for $3.8 million. Our private adjuster took $700 off the top. Right? So here's where I'll even go with this. Look, I'm totally fine if you have homeowners insurance and you're living in a coastal area and your place is destroyed or damaged. Fine, the insurance company pays out and you take that money and go build somewhere else. When you get the ocean is, we can't stop the ocean. I learned this at a young age trying to build those little sand castles, right next to the waves. They always overrun you. That it's just how it is. You can't stop the ocean. It's too powerful. And I feel like we get into a lot of these problems where we try to stop the freaking ocean. I mean, it's not just the ocean. We're going to talk about the moon now, Mike, because ultimately any talk about the ocean comes back to the moon. Do you know where low and high tide come from, Mike?
The gravitational pulls of the moon.
Yes, but do you know why?
No.
It's because the moon is pulling the Earth, not the water.
Yes.
The water stays right where it is, okay? You are literally fighting the moon pulling the Earth when you are trying to fight the tides. I just can't get that. I can't make that point strongly enough.
Got to blow up the moon.
I guess that's the only answer, is how do we get rid of the moon? The problem is things get really bad if you get rid of the moon. Just Google what happens if, we didn't have a moon, and you'd be like, oh, my goodness, it's so much worse than tides. It's really bad.
By the way, there are cities across the world who have somewhat successfully attempted to deal with this problem of major cities being below sea level. New Orleans is one of them.
And even they had major problems repeatedly.
Where's the city in Europe that also does this? And I guess the point would be
Venice. I mean, that's not really below sea level. Are you talking about the Netherlands where they got all the dams and dikes and everything?
Yeah, I think I'm talking about the Netherlands. But that would be the other piece of this. I guess that is a solution with many risks that is also tremendously expensive.
Right. It also didn't
outrageously expensive.
It also didn't work in Katrina.
Yeah.
You can't fight the ocean. You can stave it off for a while, but the ocean always wins. And this is the point that I come back to on this stuff. It's not to say that beachfront property isn't great. I think it would be fantastic to own a piece of beachfront property. But I also know that it's something where you can only do so much to fight it. There was a piece published, I think it was maybe a week or two ago. It was in light of some of the coastal storms that we've had this winter in New England. And it was some beach somewhere where the residents were paying $500,000 to have a bunch of sand trucked in. The residents were actually paying it.
Oh, yeah, it was gone in 3 days, right?
And one storm hit and it was gone in 3 days. This is the thing with the ocean. You can't beat it. And I'm not saying this meanly or anything. I'm just saying that you're not going to win that fight. And so
stop trying.
If a home is destroyed by the ocean, I'm fine with saying, look, here's your insurance claim. Great, take that money and go build somewhere else. Even find another place that, is near the ocean that hasn't been destroyed yet or whatever. Or buy a place that still exists next to the ocean. I'm not saying don't live next to the ocean. I'm just saying when a place is destroyed by said ocean.
I'm okay with all of these things. I just want to stop pretending that we're not subsidizing it.
Right.
That's all I really want is just be honest about it. If we're going to keep doing this, it's all of us, the taxpayers, who are subsidizing that beautiful view by the ocean. It's problematic.
when do I get my day there?
Yeah.
You know, I'm paying for a chunk of that.
Just be honest.
Right, exactly. Let's see. Why don't we take a quick break, and then I've got a doozy for Stack Roulette
As do
today,
I.
Mike.
I'm excited. Good.
Okay, quick break. Stack Roulette's next.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you got for Stack Roulette?
I have for you what I propose is the dumbest fashion trend since the corset. I am, of course, referring to fashion braces. What am I talking about? They are fake braces that you can buy online and adhere them to your teeth that do not do anything to provide orthodontic care. It's part of the new geek chic look that I was not aware existed. I would quote the people in this article, but I've never heard of any of them, and I don't think any of our listeners will have either. But as you can imagine, so it's basically just fake braces that you
There's like
take
charms or something on them?
No.
I'm looking at some.
Some might have charms, yeah, and I'm sure there's all different colors like they have braces, like they have with braces. But the idea is very simply that you get these pieces of metal and that you at home adhere them to your teeth using some sort. Hopefully you're using orthodontic adhesion rather than just super glue. But as at least one orthodontist is quoted in here, Dr. Staller saying, I wouldn't recommend this to anyone because once you glue them on and tie in with the wire, the teeth will want to move. Yeah, so there you have. I think I've found the dumbest fashion trend since the corset. Like, not only does it look, in my opinion, pretty stupid, but you might actually be doing physical harm to yourself and costing yourself future money in orthodontic care. So, good luck, parents of teenagers.
Yeah,
I don't even know.
I just don't know.
Maybe the powdered wig was dumber. That probably did some harm to your scalp
Wouldn't it just be uncomfortable wearing these as a fashion statement?
I mean, plenty of fashion things are pretty uncomfortable, like skinny jeans. I'm sure there are other the corset. Lots of uncomfortable things that people do to look
I've actually been
fashionable.
told that the corset can be very comfortable if properly fitted. It's just more often than not they're not.
That doesn't match with like every movie I've ever seen, but yeah.
But I think I don't think they're often properly fitted.
Got it.
I don't know. But yes, that's just
Chuck's
wild.
out there defending the corset.
I
will.
will.
Any movie with a corset, I probably hate. I hate that era.
The Patriot.
Yeah.
See, I knew exactly where to go, Tucker. I knew exactly where to go. I believe there's even a corset-fitting scene in that movie.
All right.
Or maybe I'm thinking of Titanic. I don't know. Anyways, I want to talk about this review from The Verge on... Mike, do you remember back in November, this company came out with this AI pin called the Humane AI pin?
Oh, I do. I don't remember what it was supposed to do, but I remember it.
They had like this video of... It looked kind of like it was out of Office Space. They were like, hey... We just spent all this time developing this to make your life easier. It was this 5 or 6 minute video about how it was going to do all this stuff. The title of The Verge's article, Humane AI Pin Review. Not even close. It includes such gems as this. It just has some amazing stuff. So the closest thing the AI pin has to its screen is its laser ink projector. You summon it by tapping on the touchpad or by asking it to show me something. Whatever it wants to project, the AI pin first sends a green dot looking for your hand. After a few minutes, I memorized the sweet spot, about ribcage high and a few inches away from my body. The projector's 720p resolution is crap, and it only projects green light, but it does a good enough job unless you're in bright light, and then it's invisible. Oh, okay. The projector's user face is, how can I put this nicely, bananas. To unlock your device, which you have to do every time you magnetically reattach it to yourself, you move your hand forward and backward through a series of numbers, and then pinch your thumb and forefinger together to select a number. It feels like sliding a tiny trombone. So basically they go through this thing, and that's just some of the funny stuff. Here's another one. In general, I would say that for every successful interaction I had with the AI pin, I've had 3 or 4 unsuccessful ones. I'll ask for the weather in New York and get the right answer, and then I'll ask for the weather in Dubai, and the pin tells me that the current weather in Dubai is not available for the provided user location in New York. I'll ask about the thing with the presidents in South Dakota, and it'll correctly tell me Mount Rushmore. But then it will confidently misidentify the Brooklyn Bridge as the Triborough Bridge. And half the time, seriously, at least half, I don't even get an answer. The system just waits and waits and fails. Other things, I tried to use it as not me, but this I'm quoting again. I tried to play it as a music player, but it only connects with Tidal, which means most people are immediately ruled out and also means no podcast support. I asked to play Beyonce's new album, and it either can't connect or can't play the song I'm looking for. I asked it to play Texas Hold'em by Beyonce, and the pin responded, songs not found for request, Texas Hold'em by Beyonce /UOOE9. Try again using your actions to find the relevant track.
So close.
Other things. It says, hey, this would be... Let me find where it is here. Give me 1 second. I need to move back up.
There is nothing about this that a smartwatch can't do better.
No. Having the thing right there did make me use it for some things that I wouldn't have bothered my phone to pull out to do. It feels a little like the early days of Alexa or Siri a decade ago when you could say set a timer for 10 minutes and that beat opening your phone's clock by a mile. Except, oh wait, the AI pin can't set an alarm or timer. It can't add anything to your calendar either or tell you what's already there. You can create notes or lists, which then appear on the web app, which is also something that you have to get through your phone.
Can I give you...
In conclusion...
Okay, go ahead with the conclusion.
The conclusion is pretty good here. AI gadgets may one day be great, but this isn't that day, and the AI pin isn't that product. I'll take my phone back now, thanks.
I had the first instance of artificial intelligence kind of thrust upon me when I didn't go search it out. I've used artificial intelligence tools before, but I was driving to New Hampshire yesterday and connect my phone to Android Auto, which I always do, and Google asked me, you've received a text message. Basically, we have a new piece of software that will summarize the conversation for you using artificial intelligence. Please note that we might get some of the details wrong. Would you like to enroll? And so I said, sure. And it did a reasonably good job of summarizing a text message chain that I had going with one of my college friends about getting down to New York sometime soon. So
that's fun.
That was a surprise to me. That was something new. And it was by Google without them completely screwing the pooch on it.
Taking a look at markets, the Dow's off 136 points, the S&P's up 2, the NASDAQ up 86, so mixed markets today. 10-year Treasury continuing to sell off just a touch, up another basis point to 4.57%. We're done for the day. See you tomorrow on the Financial Exchange.